We were trying to get in Anil Rego, founder and fund manager at Right Horizons PMS. He's back with us now. Anil, thank you so much, first of all, for taking out the time. Mahima this side. My first question to you is, with regards to how market sentiment is, right now, at least some days out of, so many days, we're seeing buying action coming in from FIs, though the number is very small, but that indicates something, right? Just want to get a sense as to what you are picking up. We are, at the day's high point, above the 24,200 levels. Do you think that these levels could sustain from here on, or do you think that there could be some profit booking that could follow through?
Yes, definitely. It's been, FIs coming back after some time, and they've been reasonably large sellers. But that has also been our point of view when, let's say, you have extremes in terms of, outflows and for an extended period of time, then typically at some point, it turns back. So it's not surprising. However, we believe that it's something that will happen over a period of time and hopefully will expand from there. Now, coming back to, markets as a whole, yes, we've seen a reasonable rally from, say, this beginning of this financial year. So especially in, say, mid and small cap stocks, and small caps have really, many of them have flown away. So to that extent, yes, you could see some bit of profit booking coming in on a shorter term basis. But I believe, a rally like this, typically it's been the start. So we should see it extend for a period of time. Definitely, everybody is looking for, global cues. We expect that also to settle down over a period of time. And but there will be news flows coming in at various points of time as negotiations continue to happen at both sides, and that is something which will, I think, keep markets a little bit volatile in the short term. So I believe that so medium term, let's say over 6 months or so, one is reasonably positive on it, but be ready for some of the short term moves there. So one thing that is catching the eye, and we are watching that closely, is the interest rates in the US, especially the 2-year G-Secs in the US, and that has been coming up, and that is something that one would like to watch out for. Also, in terms of the dollar, versus the other basket of currencies, it has been sort of weaker, but we're also watching that for any cues on whether there's a things are back to normal. A depreciating dollar will definitely be good for emerging markets. So all in all, medium term positive. Short term, we still think that there'll be some bit of volatility.
Sure. Anil, the other aspect is with regards to the volatility that you talked about, right? Despite of the volatility, we've seen some pockets of strength. In the last 1-2 months or so, in fact, even beyond that, we've seen, pharma names doing so well. We've seen defense names doing so well. Even certain banking names also doing so well, right? So going forward, because now we've seen some profit booking coming in the defense names, in the pharma names as well, because they've significantly run up. What are the pockets of strength that you're identifying, and what could be the bets that you are looking at going forward?
I think all of the sectors you mentioned, we believe will continue to do well, and that will continue. But what are the other places that we like? We like places including the hospital side within healthcare, if you ask me. And so to some extent, it should not be impacted by any global upheavals there. So to that extent, it also becomes a hedge for you from any global upheavals. The other part of it is we like the EMS, the electronic manufacturing services that companies provide. So that's also in a secular trend, and that should also do well. Our own sector, which is wealth management, is something that we also like, and capital markets as well. And to that extent, they have also run up, so there could be some bit of profit booking. But we continue to believe, I think these are the places to, continue to have your money.
I think the other aspect is, when I was trying to look at some mid-cap names and small-cap names, though today they're underperforming the benchmarks, but largely the mid-cap has recovered almost 17-18% from its low point. The small cap has also recovered almost 25% from its low points, right? If you are looking at these particular sectors that you just talked about, where is the action more? Would you be looking at some mid-cap names, small-cap names versus the large-cap names? How would you place it?
Yes, so actually, interestingly, we took a contrarian call sometime in February where we looked at, relative performance, and it had reached extremes in terms of, underperformance. Typically, from an excess alpha, you have a negative alpha, and that is what, we saw. And our view was that, it reached a tipping point and it should come back. And from there, we found that, small caps outperform, mid caps outperform, and small caps especially, right? Because they were really battered down and beaten down, especially the smaller companies. And so what we are seeing is sort of in line with our view that, there are battered down sectors and it's gone to extreme levels, and from here it should bounce. Along that, we looked at and we saw, earnings growth also coming back. And that gave us a lot of confidence that yes, small caps and mid caps are likely to do well. And I think it will continue to do so because these rallies are not so small, right? It's not just a 1 month, 2 month type of rally that you see. You typically see the cycle last almost like a couple of years. And, from a period of negative alpha, it's come back to sort of almost equal, and it'll probably then go back to excess alpha. And, sometimes in periods of time in a cycle, their excess alpha can even be 40% excess alpha over, say, the large cap index, and that's how small caps are. So broadly, yes, one will continue to bet on them. But considering some bit of global news and cues, etc., I think you have to be cautious in terms of the type of companies that you invest in. Look for companies that, have a good earnings growth capacity there. Avoid ones which are more, value ones, which you suddenly feel that, okay, will, really come up. And sectors that sort of could be impacted, just be watchful for from the global, volatility and uncertainty. But other than that, I think mid and small will continue to do well as long as you are careful and looking at the companies carefully, and their financials and how they are growing their earnings.
Right. Okay, Anil, thank you so much for taking out the time and giving us that entire perspective. And, it makes sense of what you just said. So thank you so much for taking out the time. But, let's also shift focus and take a closer